Hello traders and welcome to another video review. Today is Friday, August 21st, 2026. Let's take a look at the Forex economic calendar for today. In the last trading day, we have three high important data releases, all about the PMIs. Global manufacturing PMI data from the Germany are scheduled for release at 9:30. Global manufacturing PMI data from the UK is scheduled for release at 10:30, and at 3:45 we have the global services PMI data from the USA. And that's about the situation here. Generally, slight deterioration is being expected here, so we should see another important aggressive movement up or down, depending on how different is the actual number from the forecast. So that's the situation on the economic calendar for today. So without any further ado, let's switch to the charts, and we start with euro dollar. Euro dollar 4-hour time frame chart is showing us another movement to the upside. Local maximum is 1.1711, so we are moving far away from the current two channels. As you can see, very nice signal has been made. We talk about it. Very nice signal has been made here. Look at this pin bar, exactly penetrating the upper yellow and blue channel lines. Bounce to the upside, confirmation, pullback, and far away we go. So that's the current situation. We've been talking about it. Where is the next target? The next target we got on our chart. The next target is 1.1795. This is the technical resistance on the daily or weekly time frame. Market conditions are extremely overbought. We came a little bit lower after the RSI hits the level over 83 points, but now the market is still trying to move higher, and we should finish this week on higher note. Cable is doing exactly the same thing as expected. We are testing the 1.3558 technical of course resistance. This is a weekly technical resistance. You've seen it before, guys, but what I want to do is I want to apply this parallel channel to see what is going on here. Let me just minute, something like that. I think it should be cool, right? It should be all right, something like this. And now to the upside, so we got either a breakout, definitely a breakout to the upside. So maybe we will either leave it like this. Okay, and I think this is more accurate for the current situation. So we have movement inside of the channel, breakout, upper channel line test of the technical resistance. Let's switch to the daily. Yes, this is the daily test. So definitely we have first leg to the upside, pull back, second leg to the upside. It still looks corrective to me. Why? Because if you measure this, well, basically it's it's three waves. Wrong Fibonacci expansion. This is three waves. Movement to the upside is 5, but no one said it will not expand into the 5 waves, right? No one said it will not develop into the 5 waves. So that's the situation here, and 100%, as you can see, is here. So breakout towards 1.3686 is needed to confirm ABC 1-to-1 movement. Okay, so that's the situation we got now. Roughly around here. A, wave B, pullback, and wave C to the upside. If there is no, so first, technically, breakout above the technical resistance is needed. If there is a breakout, next target is 100%. And if there's a reversal, then we have the confirmation of ABC to the upside, geometrical pattern 1-to-1. If there is a breakout higher, that's it. We are done with the ABC, and maybe something else is in progress. US dollar versus the Japanese yen, very low volatility on this market. We went down towards the extremely oversold conditions, roughly around the level of 158. Then we bounced, but the volatility is just limited and not much is going on here on the US dollar versus the Japanese yen, so we are waiting for another situation to expand. 4,547, this is the newest level of the gold. We are heading towards the target, which is the 4,594. This is the target. I guess it's on a daily. No, it's not. Yes, this is that target here. Yeah, the swing high from the May 29th. So it looks like W, X, and Y is done. It looks like, only it looks like, because look at this, almost 20% was the bounce in wave X. It is still possible that this movement to the upside is another connector, X, and after this X is done, even more complex and time-consuming correction is on the way, which is the wave Z. Z to the downside, right? So let me just measure how much we got here during this movement to the upside. From the extreme low to the nearest extreme high is 15%. So actually look at this. Let me just get rid of the magnet. There you go. 20% is roughly around here. So we need to target this level here, this level. We need to break above this swing high from the beginning of the May. Roughly 4,773. If we break above this level, then one-to-one corrections are invalidated. Yeah, let's say, okay, 1% here and there, no problem. But if we break above this level, 100% expansion is invalidated, and the next target is straight on 5,418. So please keep an eye on this very, very important level here. First, this technical resistance, we are nearing towards this one, and this technical resistance. I think we could get rid of this channel already, unless we could make it bigger. Let's maybe make it bigger. So let me just move it. I don't know if I can do it. There you go. So let's make a big channel here. Downward channel. Oh, no. A little bit tricky, but I will handle it. Don't worry. I will handle it. I will do it like this, because very often I'm just moving not what I want to move, and this is the situation here, and this is the situation here I want to do. There you go. So look at this. Even with this big channel from the extreme high, all-time high, towards the second row here, can I move it like this, or it will not? It will descend. Okay, so this one, it must stay here. Where is the other one? There you go. So even if I will move it here, that's historical, right? So I want to move it to the extreme. There you go. So it's something like this. Look at that. You see, this is the channel, right? This is our big channel. And now, big, nice channel, and now breakout to the upside. So that's another confirmation that even the longer, higher, bigger channel is now violated. Okay, not really a good channel here to be placed. Still a little bit of room for the momentum. So let's leave it like this. We know what is going on. S&P 500 moving lower. This is daily time frame chart. Let's switch to the 4-hour time frame chart. Yes, S&P 500 moving lower towards 38% Fibonacci retracement, 7,618. So not much is going on here. Crude oil definitely fills the gap. So the gap has been filled. Right now, a local high was done even higher than we expected. So now the situation looks like that. This is the temporary technical resistance. As the gap was filled, this is the resistance, 89.7. This was the technical resistance. That might be the technical resistance. Look at this. Bounce to the upside gap, bounce to the upside gap. Now we have this little bit gap here, but as long as we trade above this level, 84.64, we are still inside of the rising channel, ascending channel, and we are still above the technical support. Any breakout below this level is bearish. So let me just place my arrows. There you go. So this is the key level for now, for everyone. For everyone here, this is the key level. I mean for the crude oil traders, right? So please keep an eye on this level. Any breakout lower is bearish, and we will target most likely the levels around $80. Last but not least, the Bitcoin. The Bitcoin doesn't actually stop. First zone of the technical resistance and actually the supply zone has been violated. Let me just switch to the daily. Look at this. Look at that. That's not a coincidence. That's not a coincidence. We are moving up. We are moving definitely up. This flag pattern, let me just move it a little bit lower. So we got this flag pattern, which is not a problem. Yep, something like this, a violation breakout. Now this situation here needs to be a little bit more extended. There you go. This is still our key technical level, because there was some monthly gap on the futures on Bitcoin around 72. It was filled already. So this movement to the upside. It's not about the gap filling. Now that's the first let's say supply zone. That's the second one. The first supply zone is being now tested. Now the first supply zone is being tested, right? So any breakout lower, let me just place this rectangle. First zone is being tested, right? And if we break below this zone, that means bears are back. If we break above, that's very, very bullish, because the next target will be roughly around 80 and then 83, $84,000. Very strong momentum. 1, 2, 3, 4 days in a row. Now it's about to be fifth day. 93, extremely big RSI. This is how it looks like on a 4-hour time frame chart. This is our target eventually, if this will hold like that. Okay, let's just take a look at the weekly before we will wrap it up. Look at the weekly. I'm just wondering about the statistics of this candle. This is the biggest up candle this year. Yes, look, this is February, December. This is the beginning of the January 2026. This is the up candle, the biggest up candle here. This one is nice, but this one is definitely the biggest one. So this is the weekly candle. If this weekly candle is the biggest one, this weekly candle covers completely. Look at this candle, down candle. Finally, we have a breakout towards the positive territory on weekly. Look at this. Last time we've seen the breakout to the downside on October 27th, 2025. Since then, we stayed below the level of 50. We tested it during this pullback here and then moved towards 57,000. Now we broke with big momentum above it. Something is going on, and it's definitely bullish. First bearish flag, movement to the downside. Second bearish flag, movement to the downside. And now this consolidation, big breakout to the upside. Where is the Bitcoin going? It looks like if we will hold this momentum and pace, Bitcoin is going up for a little bit more time. Levels on the chart. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.